Our lesson on stock valuation. To start with, stock is simply the process of determining the intrinsic value of a company's stock. So it helps investors to understand whether the stock has been overvalued or undervalued, or it is fairly priced relative to, of course, the market price. So the primary goal of conducting stock valuation is to estimate whether the present value of the expected cash flows generated by the stock using a certain formula will form dividends or earnings. So there are several valuation methods that we're going to look at. Each one is suitable for a particular company depending on the philosophies that are embedded there. All right. So what is the importance of stock valuation? Stock valuation is important for many reasons. Number one, it is important for making informed decisions as an investor. So if you want to invest in stock, it will avoid investors in overpaying for stock, knowing their intrinsic value. Secondly, it will also help in risk management because it will help investors to assess the potential downsides of an investment. Stock valuation also helps to assist managers in asset allocation and selection of stock. It also helps to identify market opportunities by looking at which stocks have been undervalued, where the investors can capitalize on the inefficiencies of the market. So it is important that you understand why we conduct stock valuation. Okay, so we should also understand the different methods of stock valuation. So we have what we call the dividend discount model, which is the most common that we're going to use for um, the sake of our exam questions. So before we look at those exam questions, let me take you through. So there's what we call the dividend um, discount model. It is used by discounting the expected future dividends to the present value. So it's given by the value of stock. Whenever you see PO, that is the value of stock now, is equal to D1 R minus G. So we should understand that D1 is simply equal to the dividend in year zero, 1 plus growth. Okay. So if you look at D2, the value of stock in year 2, simply D0, 1 plus growth, the power, the difference in the powers. So what is the difference in the years? 2 minus 0 is equal to what? 2. So here is power 2, here is power 1. So what becomes D3 using the constant growth model? What is the dividend in year 3? It is D0, 1 plus growth, the
G
power, the power,
1 plus G to power 3.
the power 3, correct. So I need you to take note of the difference in the powers. Suppose we are at D4 on D3. Sometimes you may not have information for the first year, but they will give you information for the previous year. So what power are we going to have here? If we're going to have D4 is equal to D3, 1 plus growth, the power, what power are we going to have there? 4 minus 3,
1.
1, yes, power 1. Okay. So this is our constant growth model. Now, I want us to understand how to arrive to the value of stock today, but firstly, we need to understand where we're coming from. So there are what we call future values and present values. So if we started with a stock that was declared in dividend now as 10 kwacha. So by the way, what is a dividend? A dividend is a return on stock. So stock, people will invest in stock in a company and you become a shareholder. So a company is evaluated in terms of shares. So when you become um, a company owner, you are called a shareholders. You're called a shareholder. There are different types of shareholders. There are what we call preference shareholders. We have what we call ordinary shareholders. Okay. So these are two types of company. What are the properties of a ordinary shareholder before we do into calculation? Just basic information of what you know. Who's an ordinary shareholder? You've learned this in the previous courses.
Okay, this is a person who owns some shares. It can be in a company, maybe a certain percentage of shares in a company. That's a shareholder.
Okay. Correct. Okay. So at least that information should have everyone in the background. So we're talking about shareholding. We're talking about ownership of what? Shares in a company. Some of you have companies here. So if you're a shareholder or a stockholder, it can be an individual, it can be a company, it can be an institution that may own at least one share in a what? In a company. So shareholders are partial owners of the company. They're entitled to certain rights. They can have what we call voting rights, okay, to receiving dividends. So the shareholders are classified in several ways. So we have individual shareholders. They can be private people who invest in what? Company stocks for personal gain. We have institutional shareholders. These are organizations like pension funds. They can be mutual funds. They are banks. All these may buy large volumes of shares. So types of shares can be based on the type. In an ordinary shareholder who may have what? Voting rights. You can receive dividends after the preferred shareholders are paid. So you bear more risks and you benefit more if the company is growing. So preferred shareholders usually have no voting rights. Okay, these ones receive a fixed dividend before ordinary shareholders. So during a liquidation, these ones are usually paid before the ordinary shareholders. Okay, yeah. So um, so these are the preferential shareholders. So also in terms of duration, we have the short-term shareholders and long-term shareholders. The short-term shareholders are like traders who want to invest just for a quick profit. They will sell their shares after a short period. The long-term shareholders are investors. They hold shares for decades and will focus on growth. So the rights of shareholders are general. Okay? They have rights to attend general meetings, to vote, to receive dividends, to transfer ownership, to inspect the company books. They have rights to share. If there's surplus share, they can buy more, right? So those are just basics about a shareholder. Now, so there are different models that we have. So if a dividend has been declared, so, and the growth rate, maybe we're given a growth rate of what? 8%. So you need to understand the growth of these shares in year one, in year two, in year three. So you can use a number line to understand how these models are. So if dividend started in year zero, so maybe this is 10 kwacha. So we need to understand how much dividend we have in year one, in year two, in year three. Okay. So dividend in year one, the model like I gave you here, it is what? D01 plus growth to the power 1. So how do we find dividend in year one? So dividend in year one would be what? D0, which is 10 kwacha, plus growth, 1 plus growth. So 1 plus 0.08. Since our growth rate is 8%, the power 1. So what do we get there? We're going to get 10.8%, 10.8 kwacha. So it has grown. And this is the dividend in year one. Are we together? I'm trying to be as basic as I can so that we understand where we're going. So who can help me? How do you understand? How do you calculate the dividend in year two? It's 10, 1 plus 8%. The power what?
The power two.
Power 2. What do we get? Others should be calculating. Then D3,
10, then 1
10 what?
plus 8. No. Oh, I was answering. Let me calculate.
10, 1 plus 0.08 the power what?
The power 3.
Power 3. So the shortcut in calculating these ones is The first answer here, you just multiply this by 1.08. The answer, 1.08. It will also help you there.
For D2, the answer is 11.664.
11.664. So this is the one that you have here. 11.664. Then for D4.
For D3.
Oh, that is for D3.
No, the one that I've given you is for D2.
664. How about D3?
11.664, yes, for D2. So I'm calculating for
D3, it's a 12.597.
12.597.
Yeah.
Okay. So if you want, you can multiply by 1.08, 1.08. Okay. All right. So this is how we find the dividends for each of these ones. So now we go to understanding how to calculate the value of stock. So this is how to find the dividends for a particular year. So now suppose we want to calculate the dividend, the price of stock now, of common stock now. Find the price of common stock now. If the dividend today is 10 kwacha, okay? And the growth rate is 8%. And the market rate is 18%. So that's when we use this formula here. Okay, so what do we substitute in this formula? Anyone to help? What do we get substitute in this formula? Anyone to help? So the value of stock now, this is what we call the dividend discount model, calculating the value of stock. So it is D1 R minus G. So what is our D1? We calculated our D1 here, right?
D1 is
If you don't know the
10.8.
D1, you start from
1.8.
D01 plus, you recalculate it. So since we have calculated our D1 there, we are going to put 10 point what? 8, all right? And what is our market rate? 18%, right? And what is our G? 0.08.
8%.
Right. So now what is the value of stock now?
$59.92.
39, not 108. But
Yes, I found 108.
Oh, yeah, it's 108, sorry.
108. Okay. So this is how we calculate the value of stock. So you need to understand that this model is very important. Now, suppose we're told that the dividend in year one is 11 kwacha. Okay. And the growth rate is 15%. And the market rate is 20% KD. What is the value of stock? How do you calculate this one? What is the value of stock now? P0 is got what? D1 over KD minus what? So our D1 is what? 10 kwacha. Our growth rate, our market rate is 20%, 0.2. And our growth rate is 0.15. So what becomes the price of stock now? What are we getting? Are we together? Is anyone lost so far?
I'm getting 500.
You're getting 500.
500.
Okay. So we are together. So let's go to question number part C. Right? So that before I got the complex ones, assume that Microdrive just paid a dividend of $1.15 and the stock has a required rate of 13.4% and investors are expected to grow it at a constant rate of 8% in future. Estimate the dividends in 5 years, 3 marks, and calculate the value of stock. Okay, let's participate. What do we do?
So we first identify what we have.
Let's identify what we have. Correct. So what do we have?
Mhm. So we have the constant growth rate 8%.
So the
This is, I think,
8% is our
R.
what? Is our what? Our G.
R. Oh, G. Okay.
G is what? 8%. What else do you have?
8%. And then R is 13.4.
R is 13.4. What else do we have?
And then we have the dividend itself.
D1 or D0? What is this?
Do that one.
Mhm.
Let me read.
Is it D1 or D0?
Just pay the div- That's D1. I'm guessing. I don't know.
When we hear just paid, it is D0. When we hear that paid a year later or the following year, that is
Oh,
D1.
okay.
Mm.
Alright.
So what is this? D0. Okay, that is 1.15. Okay, so how do we calculate the estimated dividend in 5 years? So we're going to do what? The number line. 0, 1, 2, 3, 4, and 5. Okay. What are we starting with? What is our D0?
1.15.
Okay. Then we multiply by what to get the next one?
0.08.
1.08.
1.08, sorry.
So what do we get?
Okay. 1.242.
1.242. Then again, we multiply by 1.08. What do we get?
1.341.
0.341. Then we also multiply
One
by
point four. Then we have 1.449.
1.49. Mm-hmm.
1.565.
1.565. Uh-huh.
There where you've written 1.49 supposed to be 449.
449.
Okay. 0.449. Then here,
And then 1.6 89.
1.689. Are we following so far? So the reason why we're multiplying by 1.08 is because the growth rate is 8%. If the growth rate was 3%, we would have been multiplying by 1.03. Or if you want, you can use a long cut. I'm just trying to simplify your work, isn't it? Are you together on the future values?
Yes.
Okay. Then how do we calculate now the value of the stock? Who remembers the formula? Value of the stock is equal to what?
TO
Mm-hmm.
is equal to D1
Mm-hmm.
over R minus G.
Okay. Somebody substitute. What do we have?
So the D1 is 1.242.
Mm-hmm.
And then the R is 13.4.
Mm-hmm.
And then the G is the 0.08.
0.08. What's the answer? Final answer?
I'm getting 23.
23. Okay. 3. Okay. So that is how we calculate the value of stock. So the 6 months are here. Can we fail to do that?
No.
So you need to be systematic. All right. So that is how.
Hi,
Yeah.
before you proceed, I've attended this part. I just joined a bit late. So how do you determine the formula for D1? Because D1 plus G to the power. So those ones, the D1, D2, D3, D4. Just briefly run me through how you determine
So we
which
said
power
that
to add on top
D1
there.
is given by D0, 1 plus growth. So our D0 was 1.15. 1.15. 1 plus G. Our G was 8%. So 1.08 the power 1. So this gave us 1.242. Then
Sorry, I understood this. I understood this part
D2
for this
is
particular
given by
example.
D0, 1 plus growth the power 2. So this is a long cut. You can choose the long cut or the shortcut. So I'm just being mathematical here. So even if you're going to go through this route, you'll still be getting the same answers. So the shortcut that I gave you is that if you're given the growth rate, just multiply it by the growth rate uh, on the next value. Because if you had 3%, for instance, you would simply be multiplying every answer you get here. If the growth rate was 3%, when you get the answer here, multiply by 1.03. Here, 1.03. If it was 20%, 1.2. Just add 1 plus R to multiply. That's how mathematically this answers are. It flows with that mathematical order. Are we together? So there's no harm in doing the long way. 1.15 to the power 3. You still get the same answer. So I'm just trying to take advantage of my mathematical knowledge that this is just as good as multiplying by the growth rate, 1 plus R. So if it was 15%, you have been multiplying by 1.15, 1.15, 1 throughout. Is that clear?
Yes. So just to clarify, if it's
Pardon?
D4, you do, just to clarify, so if it's D4, it's 1 plus D to the power 4.
Yes. If it's D4,
And if
it is
it's
what?
D5, it's 1 plus, if it's D5, it's 1 plus D to the power 5.
Explain that if it's D5, it's D0, 1 plus G to the power 5. The same power that is there, okay, is what you're going to maintain, right?
Okay, okay. That's what I
Yeah,
wanted to clarify.
yes. Is it clear for everyone?
Yes.
Okay, so I'm going to give you just 4 questions on what we've done. I'll need these before our next class that we're going to have. All right, I'll send them in the group. Thank you so much for your time. Unless any questions? All right. Thank you so much.
Thank you.